All right, here's another episode on supply and demand. What we're going to look at today is how many times can an area be hit before it is useless? Like, essentially, these zones are areas where there are a lot of orders waiting to get filled. So these are a lot of limit orders, stop orders, and of course, any other order you want to put in here to make price go up and down. With that being said, maybe you missed a zone at some point and you came in the market and all you see is this. Well, you can back test your zone. Right now, it's a demand zone, right? So we have a demand zone here, a supply zone here. With that in mind, let's see. And this is the current market. There's nothing else past here. Let's see how many times this demand zone has already been hit. So if you take this, now you're back testing. Look, so at this point, this demand zone, remember, because these zones are, they're pretty much in relation to where price currently is. So currently, we are looking at a supply zone here, because this is pretty much around where price is. So supply will always be on top, demand will be on the bottom. This is demand zone because it's on the bottom, and price is currently on the top. Now, does that ring true all the time? Well, these zones can flip. Because if price was literally right here, this zone right here would then be a supply zone based off of what we just did, which is backtest. Because just like where we currently are, there's a zone above it and a zone below it. So if price is currently right here in this area, this will be considered a supply zone, and this would not be a zone because this hasn't happened yet. Once you see this large candle happen, you could take this box and make it. This would now be considered a supply zone when your price action is down here. All right, so if price action is right here in that level, down here, you are able to mark this up as a supply zone. So let's see if that is true, because we're back testing, right? Well, let's back test. All right, so let's do one more thing over here. And actually, I'm going to need something, but I can change it here. This will be a supply zone, right? Let's do supply. Let's do top left because I'm going to need it somewhere else. Of course, wrong thing. Why would it be the right thing? There we go. Let's do top left. All right, so it's a supply zone right here. All right, so let's take it over. All right, now if price is currently moving all the way up through here and 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 here, guess what? It's now hitting this supply zone. So when price gets to here, it is inside this zone, which you know is a supply zone. You've already marked up your next area. So price is now going all the way up here, 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 here. Ooh, this is a beautiful thing. Because you did your research, your due diligence, and now you're able to say, I know I can take most likely my next trade from this area to this area. And let's do it there. We don't have to get every dollar. All we need is a little bit. This is a 1.17% increase or $198 increase in Bitcoin USD based off of a supply zone and a demand zone, because now this is being flipped. This is now a demand zone. No longer will we call this a supply zone. And the reason being is this. Price currently has moved, right? So we got our distance in between these two bars, these two zones. Price is currently up here, is doing all of this. So now that it's up here, This is currently our supply zone right here. We have just flipped our supply and demand zones because we're using these based off of current price action. So as it stands, price is currently moving around the supply zone. If we're looking for the market to come down, we could say reasonably, after we use our favorite tool today, our date, time, or our date and price range, well, nothing's going to be exact, but I will say once it comes out of this zone, I want to take it at least to one take profit here. That's 0.55% or $94 down. Or do I want to take it all the way to the zone that I marked out previously, which can be about $197 down or 1.15%. Now, the only reason I'm using Bitcoin right now, to me, a chart is a chart. It doesn't matter what it is. If you can take the same information and use it on any chart, it means you can trade almost any market. This is one thing that you can use to trade any market, supply and demand zones. They are useful anywhere you go. It doesn't matter if it's stocks, bonds, Forex. It doesn't even matter if you're looking at the VIX. You can use this everywhere. So with that being said, these can be used as entries and exits, and you can gauge what you can gain or lose based off of price action with your date and time. And guess what? It tells you what you are actually going to be winning or losing based on what you are doing with your due diligence. Use this tool. It's in your toolbox. It's free on TradingView. There are a lot of other tools in here that are absolutely free, and take your time. Investigate them. Everybody uses something different. I like to leave mine up because sometimes I can use that as a guide. Now, say I don't want to use that. I'll also have this. I just clicked on this. So this is my short position. This is saying I want to enter a trade here. I can do this to here. This is my trade. And my stop loss is going to be, say, right above the zone. Right? Okay. So $201 to the positive. $61 to the negative. Well, what's my risk to reward? It tells me right here. I don't got to think. It's already here. It's 3 to 1. Actually, at 3.27 to 1. So I would be risking this area in the red. I'm willing to lose this amount of money to gain this amount of money in the green if I'm doing a short position. So there's two ways you can do this. You can do it with your date and time. You can also do it with a short position. And these things will stay on your chart until you get rid of them. So if I get rid of it, it's gone. If I get rid of this, it's gone. But these are things that help you gauge where you're at in the market, what you can gain, what you can lose, your entries and your exits. And this has been another supply and demand video. And remember, these zones are in relation to where price action currently is, and they can flip. And depending on how many times they are hit, the number of orders inside of each one of these zones will become either lesser or greater, depending on how price action is moving, and of course, fundamental and future technical analysis. So take that and run with it. I hope it's something that is useful to you. And remember, we're not telling you to buy, sell, trade, or do anything with anything you don't understand. You need to do your own due diligence. Anything you hear, see, or may even look at on the internet needs to be investigated. So thank you very much, and we'll see you on another episode.